please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. The markets at this point in time still kind of treading water, very, very flat at the index level, whether it's Nifty Bank or Nifty, even mid caps, a 0.3% jump should be considered, flat. That gives us time for some more important conversations, especially earnings. Godrej Consumer posted a healthy set of earnings in the second quarter. Domestic volumes were the biggest, positive 10%. Vivek, Gambhir, Managing Director and CEO, Godrej Consumer Products, joins us now. Good morning, Vivek. Thank you very much and congratulations on beating probably every other FMCG company in terms of the volume growth. What would you attribute that to? Is there good rural demand? Is it, even urban demand chiming in? And is that the trend we can expect in the second half?
Yeah. Good morning. I think we are pleased with our performance. We've shown a lot of resilience and delivered robust, profitable growth. I think our innovation-led approach, backed by relentless execution, seems to be working quite well. And we're set up very well to deliver an even stronger second half of the year. As you mentioned, our domestic growth of 10% volumes was quite strong. This is on the back of 9% growth in the base quarter as well. And along with that, the team has delivered 24% EBITDA growth. Our guess is that this would be the best performance in the FMCG industry in this quarter. The growth has been led by our soap segment, by the way our innovations are working and how well our team is executing. On the rural side, we are yet to see a meaningful pickup whilst in rural, but we are not still seeing high wage growth in rural. That seems to be the biggest constraint. Hopefully in the second half of the year, as rural incomes pick up on the back of a better monsoon and higher MSP increases and the government focus on the rural infrastructure, it should lead to stronger rural demand in the second half of the year.
Hi, Mr. Gambhir. So I just want to focus a little more on the 10% number that we've got in soaps in particular. First of all, have the trade channels completely stabilized after GST now? And this growth that you've got in soaps, which has been very, very strong this time, will it be sustained going forward?
In terms of the channels are gradually getting back to normal. General trade is more or less back to normal. Modern trade is back to normal. Wholesale is about 80% to 85% there. There is still a little bit of a catch-up required in wholesale in the eastern part of India, which is taking some time. But our expectation is by the end of Q3, so by the end of this calendar year, all the channels should be back to normal. The good news is that offtakes have largely been quite steady. Urban offtakes have been good. As I mentioned, while rural has grown slightly ahead of urban, the potential in rural is much greater. In terms of our soaps performance, a big reason for the growth was the price cuts that we took because the GST rates went down. Along with that, our teams have done a very good job with some very good marketing initiatives and have also expanded coverage in a few new states. But the soap numbers should be looked at on the basis of a 2-year performance because the base was quite weak. We degrew our business by about 11% in the base quarter. So on a 2-year CAGR basis, I think a more sustainable growth rate for soaps should be in the low double digits. At the same time, we are expecting stronger pickup in insecticides and hair colors. So at a portfolio level, we still feel very confident that the second half of the year will be much better for us.
Okay. Well, I'll try and put a number to that, much better. But before that, just to continue with the GST theme, GST was to deliver this big logistics advantage, rationalizing of warehousing, trucks not stopping at check nakas. Is that what has that contributed in some fashion to this fairly dramatic jump in your EBITDA margins? Or is that a medium-term play? And if it is, how many percentage points in margins?
The benefits of GST are going to be transformational, but it will take some time. You know, we have seen some early benefits in terms of sourcing advantages with regards to better sourcing, which has helped a little bit in terms of improving our gross margin. The logistics costs, the journey has started. Over time, we do expect about a 10 to 15% reduction in our overall logistics and transportation costs. And typically, you know, we spend about 3 to 4% of our sales on logistics. So the EBITDA impact should be about 40 to 50 basis points, but that will take about a couple of quarters more before it fully materializes.
Okay. Mr. Gambhir, hate to be nitpicking, but I guess the only slightly grey area in the numbers was Indonesia again. That market is still contracting year on year. What is happening? When can we expect normalcy? And will you get back to sort of, I think 400 crores is a run rate that the market is also anticipating. Do you see yourselves getting back to that soon?
The environment in Indonesia still remains very challenging. Consumer sentiment is quite weak, and volume growth for the home care sector is still in negative territory. Having said that, I think our team has done well in terms of being able to protect and expand margins. Sales growth has been a challenge. The team has launched a few new innovations. So certainly we are very hopeful that the second half of the year should be much stronger, but it will take about a couple of quarters before we start the business returning back to its historical growth rates. But the good news is that sequentially performance has been improving now.
Okay. Acquisitions, India or abroad?
For the time being, I think our footprint is a very strong footprint. We have plenty of work to do to consolidate what we already have in terms of India, Africa, and Indonesia. So while we never say no to any acquisition, I think at this stage, the focus is on driving organic growth because the potential there is simply tremendous.
No Ayurvedic acquisitions. I mean, that's the flavor of the moment. You all had an Anup very long back. After that, I don't remember any, ethnic acquisitions by you. Is that an area of interest?
You know, in terms of Ayurvedic, I think we are more interested in the naturals and organic and the herbal part of the business, not necessarily Ayurveda, because that's something we don't understand quite well. Within the natural space, we already are pursuing several growth vectors. For example, we launched Goodnight Personal Repellents. This is a 100% natural product, which has been doing exceptionally well over the last couple of quarters. In Godrej #1, a huge part of our growth over the last quarter or so has really been driven by a naturals proposition. Within hair colors as well, we're pursuing a fair amount of new innovations. So naturals and herbal and organic are huge areas of interest for us. Tremendous growth opportunities. Ayurveda, no.
All right. Fair enough. On that note, we'll leave this conversation. Thank you very much, Vivek Gambhir, for joining us, and congratulations yet again on an industry-beating performance.